Good afternoon, everyone, and welcome to the Fiscal Philosophy YouTube channel. One of my channel members requested on our community page in a members only post that I cover Starbucks Corporation. Now, I know that this particular channel member is heavily invested in Starbucks, and it's one of his core positions in his portfolio and also one of his highest conviction positions. If you want to make your own video suggestions that will be prioritized by me, feel free to pick up a channel membership and let me know on the community page. Or if you want to just make a one-time suggestion, do it in the form of a super in the comments, and I will definitely prioritize those suggestions. But now on to Starbucks. They are down over 13% over the last year, which, if you were on the fence regarding valuation a year ago, this could represent an interesting buying opportunity. Starbucks did just report some slight top and bottom line misses. I mean, maybe you consider these to be more than slight, but I think in light of some of the beats they've had over the last year, especially to the bottom line, uh, this isn't really anything to write home about or be frightened of if you're a shareholder. And I think most Starbucks shareholders probably realize that, which is why, even though this just happened, the stock price isn't cratering or anything because of it. There's not much movement happening as a result. And if anything, I think a lot of Starbucks investors are optimistic about what the future holds for the company. Even a miss is great growth for Starbucks. When you look at a business their size and how much they're driving up the sales in the business, it's pretty impressive, all right? Starbucks already has almost 40,000 global stores, and they're getting the biggest growth in their international segment, although still growing in the US as well, including 10% growth in China, which is what most of the investors I talk to are possibly the most excited about. Starbucks is expecting what I think is robust store growth globally, growing stores by 7% over the next year. US store growth 4%, which, that's not incredible, but that's still pretty good for how many stores they already have here. And then China, again, taking the show, stealing the spotlight, 13% store growth in China. That's absolutely astounding. Now, I do want to point out, if you're the kind of person that avoids, for example, investing in Alibaba because you're afraid of how non-business friendly the Chinese government might be today or might become tomorrow, the fact that so much of their future growth plan hinges on China might be somewhat of a concern for you and may cause you to need to perhaps discount your valuation of Starbucks or what your potential entry point might be. While I personally don't subscribe to those fears, when I look at the dividend metrics, I do see some potential signs early on of overvaluation. We have a respectable 2.45% starting yield, but the payout ratio with that starting yield is quite high at 63.69%. Though the growth is a respectable 7.84%, I think if the yield is below 2.5% and they're already paying out over 60% of their bottom line in dividends, it shows that this is probably getting a premium valuation from the market. But that may not be the case if they can sustain a very respectable, solid growth rate. If they could continually grow at 7.5 or 8% for a while, perhaps things would just even out for you at the end of the day. Presently, at roughly $93 a share, we are on the very low end of what analysts forecast for the price for Starbucks. I think, honestly, that the higher side of this is quite optimistic and is assuming a lot of great things happen. I'm not saying good things won't happen, but to impugn a value of 150 on Starbucks per share, I think you have to assume perfection. While their growth is certainly impressive, I think it's generally advisable to account for and plan for a few stumbles along the way. And I think if you're valuing Starbucks closer to that high side, you're really not allowing for any stumbles, missteps, slowdowns, anything other than absolute perfection across the board for the years to come. I do appreciate, however, that they continue to reward shareholders with both robust dividends and buybacks, in addition to continuing to grow the sales of the business. I think it's impressive that they're able to do all of this at the same time, in spite of how large they already are. As a random positive X factor, I do find their CEO quite impressive. When I've heard him speak, I was almost convinced to start buying Starbucks stock on the spot. That's how, we'll say, convincing he is of the merits of the business. Though I somewhat counterbalance that with the possible negative X factor of McDonald's Cosmics potentially taking away market share, especially in the US domestic market. I've been telling people that my own provisional price target for Starbucks is probably around $75. I'm basing that off of the assumption the 2024 projections for earnings will come true, a 10% discount rate, and I will do the market standard discount rate of 10% for high quality companies. And assuming growth of about 10% a year to the bottom line, compounded annually over the next 10 years, with it slowing down to 6% thereafter, that's probably a bit less than what analysts and other investors are anticipating. But again, I like to price in a few potential back steps, stutter steps, slowdowns, some misses. I don't think any company is likely to beat every single quarter consecutively for decades at a time. I just don't think that's a reasonable thing to expect for any business. And I think this also potentially prices in perhaps, less than absolutely perfect stellar results in China. The China story has been great so far, but the music may stop playing at some point, and I don't want to be the one left without a chair in that instance. So I'm pretty comfortable with this price. However, I'm certainly open to doing more research, and I would consider watch listing it a bit higher, maybe in the $85 range, and saying, hey, maybe it deserves a little bit more of a premium just for the quality and the fact that I'm probably beating up the growth a little bit more than a lot of the market is. Let me know if you think I'm being too conservative, not conservative enough, if I'm beating it up, or if there's something I'm missing about the real growth story of Starbucks and what it'll be in the next few years. Personally, I think it does depend largely on if they can continue to drive those numbers in China. At the end of the day, they're expecting some of the best growth in their per capita GDP and have the fastest growing middle class on earth. And that's definitely worth something for a company like Starbucks, because at the end of the day, what can Sarah from accounts payable and Becky from HR not possibly live without every single morning?
What? Orange mocha frappuccino!
If you made it to the end, I want to express my deepest gratitude to you for supporting the channel, and please subscribe if you haven't already. Like the video, help me out in the algorithm. Join us on Discord, link in the description. Consider becoming a channel member. And remember, if you want your suggested stocks covered on the channel, consider becoming a member to have your voice heard a little bit more loudly, or drop me a super thanks with your recommendation. Take it easy, everyone.